Right. Moving to our next point, we're still in that, improving inflation data. Now we're looking at the PPI, so Producer Price Index. PPI signaling deflation. You say maybe.
Right. Okay. Let's just talk about the PPI for a minute. That is like the CPI, but the PPI is further back in the supply chain. So when we talk about the CPI, the Consumer Price Index, that's what we as consumers pay, or the change in what we're paying from year to year. The PPI is further up the supply chain. Those are the costs of the inputs. So if you're a producer, if you're a manufacturer, this is what it's costing you to produce and ship a lot of goods. And one of the reasons the PPI came down is fuel costs have come down. And so shipping costs have come down. And that has been a huge change. And that is why the PPI came in quite much lower than the core PPI, because the core excludes energy, which is what we were talking about before. So the reason that, I'm a little skeptical on this is because, so the reason we look at the PPI is because it tends to be a really good early indicator of consumer demand, right? So imagine that you're a manufacturer. Imagine you're making things that people like, they want, and they buy, and you think the economy is going to be great, and there's huge consumer demand. Rob, what do? You run your factory all out, right? You hire extra people, you produce a ton of stuff. When the PPI gets weak, what's often happening is producers are saying, wait a minute, I'm concerned about consumer demand. I'm going to, there just isn't as much demand. And so I'm going to spend less on this stuff. That combined with lower fuel prices is what helps here. And so the reason I say maybe is there are a lot of indicators that, the consumer might be a little bit weaker than we had thought a couple months ago. But if you look at consumer spending, it's still very, very high. And so, we're kind of at one of those inflection points where sometimes, you're looking at the start of a trend, and sometimes you just see something where, there's an anomaly, and for a month or two, these metrics take a breather, and then you end up with the acceleration in prices again. And at this point, if you wanted to have evidence in either direction, you could find evidence to support either thesis, that things are for the consumer are getting better or getting worse.